Howden Africa designs, manufactures and markets specialised air and gas solutions.
Well, that sounds a bit cryptic, so let's break that down. It's airflow technologies, so big fans, for example, used in underground mining to blow cold air down into the mine works, and then also equipment that extracts power station flue gas and cleans it up, that kind of thing.
Market cap, 2.1 billion rand, PE ratio here of 10. It's not currently paying any dividends. Before we go further, share price graph.
Always sets the scene. So that's what's going on there. You can imagine big mining capital expenditure and Eskom were delivering the goodies back then in 2010, 2011, 2013, but it's been a bit harder since then.
So it comes back to what you were saying, the supply chain is so important in the industrial suppliers, and what is actually happening to the companies that they are supplying to dictates their livelihood.
Yeah, this is a company that's largely dependent on capital expenditure. We know what we're going through with the downgrades in our country, and our finance minister and government has sort of gone out and said, listen, we don't want any further downgrades. We are going to manage our capital expenditure. A lot of, or any of the recent growth has largely been based on Eskom. We know that there are new power stations coming on board, but at the same time, they're closing at the power station. So it's just one of those companies that I feel, is there much growth here? No.
Too exposed to Eskom. Could be many more skeletons in the closet when it comes to Eskom.
Yeah, and its first 10 years on the JSE also had a bit of hit and miss. They had a lot of bad acquisitions and a few good ones. So it also doesn't give me a lot of confidence in the management team, even though it's changed over the years.
So it sounds like one of those, when you said at the beginning, some I wouldn't touch with a barge pole. It looks as though we're going to go this way on Harden.
But it's actually a pretty solid outfit. I think there's something important to understand about this one. They are a subsidiary of a global corporation, Harden, which includes the Carrier brand. So this is a company that was established in the 1850s by a Scottish man with the surname Harden, and they own like 60% if you add it up. Now what happens with companies in that position is you start getting into these issues where there are global relationships, funding and business assistance agreements. So about 3 years ago there was an almighty kerfuffle because they were making quite a lot of money, but then the shareholders, independent shareholders, said, but where's it all going? Well, it turned out there was an arrangement between the parent company and the South African subsidiary whereby, you know, if they succeeded above certain targets, then that would bypass the ordinary shareholders. So they committed themselves to being much more transparent, had a big investor relations, build-out relationship building exercise, but it did leave a bit of a bad taste, I think.
So you did go on for a long time there, but I didn't jump up and down because I thought that the information was very valuable.
Interesting.
Actually, it was interesting, yes. Don't you think, Mduduzi, you didn't throw anything at him?
No, yes.
No, it was very interesting. You were just sharing your homework there with us, so we let you continue.
Let me off this time. But please, next time, 5 seconds.
Don't worry. You don't have to give me too much of a reason to whack you over the head.
Yeah.
Hot or not?
Definitely not. I don't see it going back to its 2014 levels anytime soon. So, no, definitely not.
Paul?
Yeah, no, they got facilities in Boysons and a factory in PE. New CEO William Thompson took over from Thomas Bardwell, was there before, but these are global deployees. He's a Brit that comes in. No, I think it's going to be profitable in phases, but it's entirely dependent on capital spending. So no.
No hot.